Welcome to Bears in Exile. Today is Tuesday, November the 27th, and this is the market overview, looking at the Dow, SPX, VIX, TNA, UU, PFXE, GLD, SLV, and all the rest. And away we go. So, today, the market took a little hit, down 89 points. Fairly nice. And so far, so good with the wait for Monday call and more for the turn Tuesday, Wednesday, and actually today turned more than I thought it would. So that was a bit of a surprise, but I mean, once you get into that close, it's more difficult. But anyways, so here we are with the Dow. You can see the decline today, busting out the halfway mark of the big green candle from Friday. So that is bearish. We still have the bottom of the candle to contend with down here at 12,833. Only about 40 points to the downside, not much. But that should be some kind of at least attempted support if we continue to go down, which, well, I'll get into that. So what do we have to work with today? Well, we had lost the 200-day moving average yesterday, which is a bad sign, and I continued on today. We don't have separation of the short-term moving averages, so a downtick here doesn't mean too much because already it would be resolved. So, but if we wanted to look at it that way, we'd have to see what it wants to do next. Certainly they can try to catch it at this point. And we've been talking about the secondary reset. Now we have more to work with. We have the CCI moving down, the RSI is moving down, the fast stochastic is moving down, but we still have the MACD histogram in ascent, the MACD in ascent, the 14-day RSI moving average in ascent, and the slow stochastic in ascent. I said yesterday that I'd really like to see the slow stochastic turn, and then the writing will be on the wall, but this entire time we haven't been happy with the angle of this ascent, and it bumped right into the long-term moving average bar and fell down. It is, I hate to say this, but normally if you want to get a secondary chance at the long-term moving average bar, it only falls back a couple of spots and then attempts another try at it. So I'm a little bit cautious about that, but other than that, all the indications seem to be right on track for a secondary reset to complete, and then go down to meet the 14-day before its movement up. So overall, I like it. We did not get a topping area in the heat map, which would have been much nicer if we had had that. So that's another reason why I'm a little bit cautious right here. But anyways, I don't want to read too much into it. Moving on to SPX, more of the same. We don't have a fully separated short-term moving average bar, but if we were to look at this as a downtick, then you would be looking at just above 1390. But there's some other things going on here. I don't know why my lines get messed up, but they do. I'm going to pause this for a second. Okay, just had to fix that really fast. Didn't want to bore anybody. And so we have the descending trend line here. We talked about it. We've been watching for it, and kind of interesting that we have not reversed at it. I think that would be more optimal as well, simply because going down, if it were to attempt to reverse, which is possible still, then it can build momentum to break through it. So it's just something that I see. And beyond that, SPX, unlike the Dow, where did it stop today? Right at the midpoint of the big green candle. So support on this one, I would say that it has held so far, but yeah, it's really close. So tomorrow, very interesting. I'm going to look at the 60-minute time frame, see if there's anything special here. And no, not really. Move down, move up, or move down. But the 60-minute is looking pretty darn bad. Everything is in alignment for move to the downside. So 60-minute time frame absolutely looks more negative than positive. And the daily on the Dow and SPX, it is in the very, very short term more negative than positive. But if it does move down, it won't be for too long. So almost certainly will have a higher low if it continues to move down. At least on SPX, it has a little bit of a topping area in the heat map, unlike the Dow. So, but support is holding on this, whereas it was broken on the Dow. So very, very interesting. Hopefully we'll have some more tells somewhere else. And here we are with the VIX. Now last night we had the uptick, 4 days to complete, and made really good progress on trying to resolve that uptick. Not too far to go to get it done. At one point of the day, it looked very bad, but especially at the lows of the day for the VIX, but it was able to recover, and so it seems to be on track. 3 more days to go to resolve that uptick target, and then we'll have to see what it wants to do next. You can see the secondary indicators rising with a couple holdouts, the MACD itself, and the 14-day RSI moving average, of course. But yeah, and it is bullish engulfing yesterday's candle, so things do look good VIX-wise for the bears. Going on to TNA, small caps. At the end of the day, in the daily running thread, I was saying that I was looking at TZA, the opposite of TNA, for a scalp. And, you know, this looks really good, but I ended up not doing it simply because it needed a little more development. But we have almost a gravestone doji. It is a inverse hammer. It went right up to the 200-day moving average. It backed away from it. This is a really good reversal candle at the top of a possible range. This has had a really nice move. And we have the fast stochastic moving down and the RSI moving down, but everything else is either holding sideways or still moving up. I would just like to see a little more to confirm that it does indeed need to go down. And but wow, you know, this looks really, really nice. Definitely potential there. UUP, the dollar. Now this is a definite possible tell. Last night we were talking about the support line, and it's bounced off of it. It was nice. Today we got the uptick. How about that? We got the uptick today. Uptick gives us a target of 22.08, which 7 cents to the upside. Not the end of the world. I figure if it's going to resolve itself there, they'll probably just go ahead and complete this entire gap area here. We've talked about in the past videos about double gaps back here, and so totally natural, looks right. We have an uptick. That is a pretty good tell that there will be a little more to the downside, but we have 4 days to resolve, so going all the way to Monday of this coming week, and we'll see what happens with that. It is a spinning top today. And in the longer term, of course, we've talked about the need for a secondary reset. You have the CCI going up, the RSI going up, the stochastics turning, losing momentum on the MACD histogram, losing momentum on the MACD. 14-day RSI moving average poised for a really good move to the downside once everything comes back into alignment. So that along with the uptick, absolutely, it looks like it has a little up to go. And USO oil, not really telling us too much today. Red spinning top, not telling us much of anything today. Everything generally just down a little bit. The daily does look more negative than positive, but it's very minor. Going on to GLD. Yeah, look at this. Gold is bullish. The market is normally bullish. And look at that. We got a downtick on gold today. Downtick gives us a target of 167. What is that? 167.70 roundabout. Yep, 167.70. $1 down from where it is at the moment. Not that big of a move. We do have good positioning and a first day downtick on the MACD histogram, but target $1 down from where it is now. And SLV. I was really hoping this would get to 34, but not looking that great at the moment. Certainly could be worse. There is no downtick here. It is a doji star right below the upper price consensus level, which is minorly bearish. First day downtick on the MACD histogram. Most things attempting to curl over at a top, but not convincing at the moment. Not yet. Sure would like this to go up $1, but I guess we'll see if that happens or not. And CompQ, the NASDAQ, having problems with the 200-day moving average. Almost getting right to it, backing away. Yeah, not a good candle for today, but we don't have enough development on the secondaries yet. Fast stochastic moving down, RSI moving down, everything else still moving up. Need to see some more, and then it will be really good odds. Really good odds. Having problems with the long-term moving average bar. We know that the ascent has been ridiculous. We have gaps below us. Do I think that this can turn right now and fill all those gaps? Not really. But I could see filling this one. I could see filling that one. Going on to Apple. Where are you? There you are. All right. Went right to the, actually pierced the halfway point of yesterday's nice green candle, backed away, having problems with the long-term moving average bar, and we do not have any indication yet, besides the RSI ticking down, that it's really time for this one to fall to pieces. Certainly it could start tomorrow, but we just don't have enough data on it today. And GE trying to get a better read on the Dow. Yeah, very nice. Lower the low than yesterday. Excellent. Nice tail at the top, coming right into the long-term moving average bar and retreating. We have the RSI and the fast stochastic swooping on over, but nothing else. This one needs more development as well. But I think that it'll be really evident, really quick, if the market is going to fall to pieces, or at least have a decent pullback. I think it'll be really, really evident. And, just like some of the other charts, no full separation of the short-term moving averages. Yes, there's a downtick today, but let's say that all that it's doing is resolving itself here. It's only 7 cents. So we really need to see it hit that level and close below it, and then things will look a lot worse. JP Morgan, most important bank. And we do not have a new recent high. We have disagreement in most of the secondaries. This one is totally questionable. There's not enough data here to really lean one way or another. So I'm not going to touch that one. And XLF financials as a whole, downtick today, resolved intraday. although it's a messy, jumbled mess with the short-term moving averages. And beyond that, we do have a first day downtick on the MACD histogram. We're losing momentum on the MACD, down on the RSI, down on the fast stochastic, sideways on the CCI, sideways on the 14-day RSI moving average. This one looks worse than JP Morgan, and certainly is right at the point where further down movement should be a good tell for the short term. Can it fill this gap right here? I don't know, but that would be a really nice target, and that would be just shy of 15.3. Really nice place for it to go down to, if it's really going to go down. And overall, that's it. Nice development today. Did not get as many turns as I had hoped, but it is so darn close. So darn close. So Wednesday, very important day. We'll see if they're able to catch it or not. If they're not, it's probably going to be the day that we get the turn. So there it is. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you.